Hello and welcome to Vision Economics Academy. Today we will be covering the last method of national income measurement, that is expenditure method. Now what is expenditure method? The expenditure method is a way to calculate national income by adding up all the expenditures made in an economy during a specific period. Now, the factors of production or the factor inputs are paid for their services. So that is factor income, right? So whatever factor income earned by the factors of production is spent back in buying goods and services produced by the firms, right? Goods and services produced by the firms. Now, that is what expenditure method is all about. It includes the total spending on goods and services by household, businesses, government, net export, that is export minus imports. As we move on in this chapter, we will be clearing our understanding about this method more, right? Now, what are the components of the expenditure method, right? Now, component of the final expenditure, you can say, is first would be private final consumption expenditure. Okay, I'll explain each of these terms as we proceed. To adding on it will be gross domestic capital formation, right, plus government final consumption expenditure, then net export. Adding all this, we get GDP MP. All right. Okay. Now, gross domestic capital formation can be further divided into two or three categories. That is gross domestic fixed capital formation plus inventory investment or change in stock. We all know what change in stock is. It is nothing but closing stock minus opening stock, right? Okay, we can add one more here, residential investment, right? And net export is nothing but the difference between export and import. All right. Now, gross domestic fixed capital formation is addition of net fixed capital formation. Now, if you add depreciation in net, we get gross, right? Right? Okay. So these are the components of final expenditure. By adding all this, we get GDP, and we know once we get the GDP, what we have to add, what we have to subtract, and whatever the question has asked us to find out, we can find that out, right? I hope I'm clear here, but I will explain each of these terms elaborately, okay, so that you won't have any confusion. Now, private final consumption expenditure is the first component over here, okay. Now, what is private final consumption expenditure? It is the total amount of money spent by individuals and households on goods and services for their personal use. Now, whatever expenditure that is incurred by the household, right, on all types of consumer goods, that may be durable, that may be semi-durable, non-durable goods, except houses. Why except houses? That I'll come later on. Okay, do remember here why houses is excluded. Okay, so all durable, semi-durable, non-durable goods, whatever these type of goods and services are there, the amount that is spent on it by the private households, right, or an individual, is private final consumption expenditure. Now, private means, we all know, it may be an individual or household, right? It is not the government. It is not the government. Okay. Now, final means goods and services that are ready to use goods and services like food, clothes, mobile phones, etc. Okay, it's not for resale, not for resale, right? Then consumption expenditure. See, we can break down each of these word and find the meaning of it. Consumption expenditure means the money that is spent, right? Okay. Now the next component is government final consumption expenditure. So government final consumption expenditure is the total spending by the government on goods and services, right? So all this expenditure are, made by the government, um, to meet the collective needs of the society, right? So government final consumption expenditure also has few components. Now, most of us, we do not go into too deep uh, to this matter. However, I would want to make it clear as to what all is included in the government final consumption expenditure, because sometimes in the question they would not have given this directly. Okay. Now, in government final consumption expenditure, first component is intermediate consumption. Please pay attention over here, okay? Intermediate consumption of the government. Now, it refers to the value of goods and services purchased by the government that are used up in the process of providing public services within a financial year. So, whatever services that the government provides in a financial year for the public, that gets that is included in the intermediate consumption. So, that is also an expense of the government. So, it's an expenditure. Compensation of employees is also added. Now, compensation of all the government employees for their services plus direct purchases from abroad for embassies and consulates located abroad. So, we as India would have various embassies and consulates located in the foreign country. The Indian embassy in Japan, for example, whatever goods and services that is purchased by them, okay, for their service, for their daily administration, that would come under the expenditure of our government, right? So that is also an expenditure. Minus, what we exclude is sales of goods and services by the government. So that is the revenue. So that is not included, that is in fact subtracted. So government final consumption expenditure includes intermediate consumption of the government, compensation of employees, direct purchases from abroad, for embassies and consulates located abroad, and minus the sales. Okay. Now the intermediate consumption includes all the office supplies, fuel for government vehicles, maintenance services, utilities like electricity, etc. All these things. Okay. Now we all know what compensation of employees is, and I've already already explained it, right? Now the other component is government gross domestic capital formation. Gross domestic capital formation. Just imagine you are building a business. To grow your business, you need to buy machines, right? You need to build factories. You need to store raw materials. For future uses, right? So imagine if you are building a business, you need all this. So all this spending creates or adds productive asset. That is what we call as capital formation. Okay. Now, gross domestic capital formation also includes two components. It also includes two components: gross fixed capital formation and inventory investment. Now, gross fixed capital formation, it includes whatever investment is made on businesses, right? By building new factories, right? Buying new machineries, etc. Now, there is another investment made in residential construction. Now, the reason why over here except houses were there and I made a star over here is because all those houses and residential construction is included in gross fixed capital formation, because some asset is being created. All right. Now residential constructions like building houses, and gross public investment is also part of it, that is building of bridges, flyovers, etc. All these are also building a productive asset. Now what inventory investment is? Inventory investment is nothing but it refers to the physical change in the stock of raw materials, that is nothing but closing stock minus opening stock. Okay, it is referred to as inventory investment, it is referred to as change in inventory, okay, or change in stock, etc. All right. Now the last component is the net export. Okay. Now export refers to the expenditure by foreigners on purchase of domestic product. Whatever we make in India, and it is the goods that is made in India is purchased by some foreign country. Now that is, we are selling the good produced by us, right? So if India is selling, okay, so goods to abroad, for example USA, that would be export. Now we would be earning here, right? The foreigners would be spending. Now when we import, we are bringing the goods in by paying, right? So money goes out of our country, right? Now the net export is the difference between the two, that is net export is equals to export minus import, okay, that is termed as net export. All right, let us see one example as to how to solve the numericals. There is a question over here, calculate NNPFC by expenditure method. We already know what all are the components of final expenditure. So we can see it from here. We have to include private final consumption expenditure. Then what we need is gross domestic capital formation, but gross domestic capital formation is not given directly. We have net domestic fixed capital formation. Now, in this, the depreciation is already excluded. It has already been done. Okay, right? Now, what we need to add on to this is change in stock or inventory investment. There is closing stock minus opening stock. So, what do we need here is 8, that is private final consumption expenditure, plus net domestic capital formation, plus inventory investment, that is closing stock minus opening stock, right? Then we have government final consumption expenditure, which is given here directly, 3 number, right? And plus net exports, which is given directly. See, imports is given here, okay, but it's just there to confuse, as net exports has been given directly, so we are not including this exports, it's already given here. So 7, okay. Now adding all this, we'll get, see, in the component of GDP, component of final expenditure, we were getting GDP MP. Now since the depreciation has already been deducted, we'll get NDP MP. The question has asked us to find NNPFC, which is national income. Okay, all right. Now let us put the value 1500 plus 350 plus, within the bracket, closing stock is 100 minus opening stock is 60, all right, plus 3 is 200 plus 7 is minus 10, okay. Now what do we get here is 1500 plus 350 is 1850, plus here 40 is remaining here, plus 200 minus 10, right? So 1840 plus 40 is 1890, plus 200 1990, 2090 minus 10, that is 2080. So our NDP MP is 2080. Now what we need to find is NNPFC. Now we know from NDP MP, if we want to find NNPFC, what we need to do? From domestic to national, its NFIA has to be added, right? And from market price to factor cost, we have to subtract net indirect taxes. All right, so let us do that. NNPFC equals to 2080 minus, what is the value of net indirect taxes? 40. And what is the value of NFIA is minus 30. Now 2080 minus 40 minus 30 would be 2010. So NNPFC is 2010. So one extra bonus, okay? We'll find GNPFC as well. Now how to find GNPFC? GNPFC is nothing but NNPFC plus depreciation. Now the value of depreciation given here is consumption of fixed capital, other name of depreciation, that is 50. Now 2010 plus 50 would give us 2060 crores. That is GNPFC. Okay, now the figure is given in crores, so we write crores. Okay, so this is how we need to use the expenditure method to calculate the national income. My dear students, thank you for your patient listening, and thank you for subscribing to my channel, for regularly supporting me. And if you want to encourage me to further bring this kind of videos and help you, then please keep supporting me, subscribe the channel, view it, and share it share it among your friends and family. So thank you. We'll meet again in the next episode, where I will be solving the unsolved practicals of Sandeep Garg. Thank you.